Hello everybody, welcome back to my channel where we talk all things finance and investing. Today's video, I want to give you an introduction to the world of Forex trading and the Forex markets. So many people have that dream, the amazing dream of sat on a beach somewhere with nothing but their laptop, being able to trade the Forex markets 24 hours a day, making loads of money and doing it from wherever they want. So I thought I would give you an introduction in the Forex markets. Let's get into it in today's video. Okay, so what is Forex trading? Well, Forex is really just the short for foreign exchange. It's also known as FX markets as well. And basically what you're really doing here is you're just exchanging one currency for another currency or a foreign currency. Simple example, if you live in the UK or the US, for example, and you go away on holiday, maybe to Spain or to Mexico, well, you're going to be exchanging some of your money in pounds or dollars, for example, into euros if it's Spain or Mexican pesos if you go to Mexico. That is a foreign exchange transaction. But beyond travel, there's a whole other world of foreign exchange happening all day long, 24 hours a day, 5 days a week. And that is what's happening with the Forex markets. And really all it is the act of buying or selling one currency versus another. The Forex markets are some of the largest markets in trading in the world. In fact, there's literally trillions of dollars worth of currencies that get traded every single day. It's the most liquid market in the world as well. So you can buy or sell a huge amount of currency just by the click of a button. Also, Forex trading doesn't happen on a centralized exchange like stock trading does. So there's no like New York Stock Exchange or London Stock Exchange, for example, of Forex trading. It happens OTC or over the counter. And all that really happens here is you have a load of the big banks around the world buying and selling currencies at different times and different prices, and they provide this liquidity. So they're known as liquidity providers. And a lot of brokers, online trading platforms, for example, will tap into this liquidity, use that as a feed, getting prices, buy and sell prices for each of these different currencies, and they'll put it on a platform for people like you and I who wish to trade Forex as well. And that's really what's happening, and hence why it's able to trade 24 hours a day, 5 days a week. It actually starts trading on Sunday night, London time, and finishes up on Friday, London time as well, on Friday night. So the main reasons that people or even companies like to trade Forex, it really comes down to speculation and hedging. So a lot of individuals who trade Forex are doing so, as I mentioned earlier, to try and make some money off of trading the markets, known as speculation. But you also have a segment of the market which is huge, and that is people or companies that are trying to hedge their Forex exposures. Think of it, if you're a multinational company that has supply chains in all different parts of the world and you need to pay in dollars or euros or other currencies around the world, for example, and then you're building your product and you're selling it in a different currency in a different market, then you have massive exposures there. Because of course you're taking your revenue in one or two currencies and you're paying it out in several others. So a lot of companies will use these big banks to help them with their transactions of hedging off these exposures. This is a huge part of the market as well. But it's not just big companies. Think of another simple example. Imagine you're an individual who has decided to sell your property in the UK, for example, to buy one in Spain, Italy, or France. Well, if you're selling your property in pounds and then you're going to buy one in euros, maybe in a couple of months, you've got an exposure there, because if the pound were to weaken a lot versus the euro, then all of a sudden that house price to you has gotten more expensive in pounds. So individuals as well will use the Forex markets to hedge off their risks like that. Okay, let's get into a couple of the basics and a couple of key things to know. First of all, Forex trades in currency pairs. You're trading one currency versus another. Okay, so when you see a quote of a Forex trade, say, pound dollar at 1.3304, what that means is one of the first name currency of the pair equals how much of the second. So in this example, 1 pound would equal $1.33.04 on top of that. Okay, and you're really buying or selling one versus the other. So in this example, if I thought the pound was going to strengthen versus the dollar, then I would buy that. You always buy or sell the first name currency in the pair. Why? Well, if I thought the pound would strengthen, I would buy it because that number 1.3304 will actually increase as the dollar weakens versus the pound. But if I thought the opposite was going to happen, the dollar would strengthen versus the pound, then I just simply sell that trade. And of course, the number will come down as the dollar strengthens versus the pound, and that's how I would make money. Another key term is pips. Forex is known to trade in pips or points. It really just stands for percentage in points. And it's typically the fourth number after the decimal. So in this example, if I had a pound dollar and I bought it at 1.3304 and then I sold it at 1.3305, I made 1 pip in that example. Then there is the spread, and this is how brokers will make money when they're trading Forex or offering Forex trading to you or I. They generally don't charge you a commission like stock trading, for example. They really just charge you a spread, and the spread is just the difference between the buy and the sell price. You probably see this all the time when you've gone to exchange money somewhere, hopefully not the airport, where the spreads are incredibly wide. But if you've gone to physically exchange money at a money changer, you'll see a price that they buy and the price that they sell. And the difference between that is how they make their money. So keep an eye on that. And the closer those two numbers are, the spread, the smaller the spread, then the less your fees are to actually exchange that money or trade the currency. When you're trading Forex, they tend to trade in lot sizes as well. And a standard lot, generally speaking, is 100,000 of the first name currency, and the value of every pip, generally speaking for most, is 10 of the second name currency. So if I bought one standard lot of pound dollar, I'd be buying 100,000 pounds, and I would be making for every pip $10, whether it moves up or down. So the value of every pip for a standard lot is 10 of the second name currency. You can trade mini lots as well, which is worth 10,000 of the first name currency, and the value of every pip movement will be 1 of the second name currency. Also, when it comes to trading FX, as opposed to physically converting the money for your holiday, for example. So if you're doing an FX trade, you're going to do this trade on leverage. And what does that mean? Well, effectively, if you're going to buy a standard lot of pound dollar, again, 100,000 pounds, well, the broker that's providing that transaction to you is not going to ask you to have 100,000 pounds in your account. In fact, they're going to lend you the money and ask for a deposit known as margin. And when it comes to Forex, the margin rates tend to be very low because it trades 24 hours a day and there's so much trading that happens, the liquidity that's involved. So you can actually get margin rates or leverage rates 1, 2, 3% depending on the currency pair and the broker and the regulations in that particular market. But it's not always quoted as percentages. In fact, it's not uncommon to see leverage rates advertised at, say, 100 to 1. And what that means is you're controlling, say, 10,000 of the first name currency for only 100 of a margin deposit. So if you divide 10,000 divided by 100, that is how you would get your 100 to 1. You're controlling 10,000 for a deposit or a margin required of only 100. So when you see it advertised as leverage as 100 to 1 or 50 to 1, that's how that works. So what do people look at when they trade Forex? Well, the majority of cases that I see from speculators is they're trading off of technical analysis. And by that, I mean they're using charts. So they're opening up a chart, they're looking at the patterns, trying to identify specific movements that happen, the most basic being support and resistance. So if a currency pair moves down to a certain level and it's done so 2, 3, 4 times, and then it goes in the opposite direction, well, then they will use that in the future. For the next time that currency pair hits this level, they will then buy it on the view that it tends to turn around and come back up. And where it hits resistance, sort of at the top of that chart, it tends to turn around and come back down. At that point, they would look to sell it as well. But technical analysis overwhelmingly is what I see in day-to-day trading of the Forex markets. But it's not just technical. There's fundamental analysis as well. Things like inflation, interest rates are absolutely key when it comes to Forex trading, because if an interest rate increases on a particular currency, then of course it makes it more valuable to hold that currency because you'll receive more interest for having money deposited in there. So interest rates are absolutely key. But not just that, geopolitical events and also economic and political stability come into play big time. We certainly saw this in 2 occasions over the last few years. When we saw with the Liz Truss tax cuts, unfunded tax cuts, apparently that were released in September 22, we saw the value of the pound absolutely crash versus the dollar. And the reason for that, whether you agree with their policies or not, but the market made a judgment call that these tax cuts were too aggressive, too unfunded. We've lost our confidence in this government, and the pound took an absolute beating for that reason. And we also saw this when Trump announced his huge tariffs on April 2nd as well. The dollar actually started to weaken. And why was that? Because people started to see a bit of a weakness in political stability in the US, and it was taken out by selling the dollar as well. Now, if you're going to be getting involved in Forex trading, one thing I would absolutely recommend, and it's super key here, is your risk management. Like any other type of investing, human emotions and risk management are absolutely key. You want to use things like stop losses to protect your downside in case this trade goes wrong. But also, when it comes to risk management, one of the keys is never placing a trade with too much of your account value on the line. A good rule of thumb is the 2% rule. So you only risk in a particular trade 2% of your overall account value. And that way your emotions are less likely to take over and lead you to do something that you shouldn't do and cause you to blow out your account very quickly and lose money. But overall, you always want to understand your risk-reward ratio when you get into a trade or you go into Forex trading. Look, the Forex world is very exciting, it's very interesting, and can be very fascinating. And of course, with 24-hour trading, it's very convenient. A lot of people choose it for that reason. They can come home from work, log on, and actually start trading in the Forex markets. But as I said, stick with your risk management and don't let your emotions get involved. There's so much more to this. This video was really just an introduction into Forex trading. I hope you liked this video on FX trading. If you did, why not hit the like button? Subscribe to my channel if you haven't done so before, and always leave me a comment. I love to hear from you and what your thoughts are on the Forex markets or anything else that's happening in the markets at all these days. If you want to know how to handle a stock market crash in the future, some people think we're headed back for a sell-off. Well, I've done a video on that not too long ago, how to handle a stock market crash. I'll put a link for that video right up here. Just click on that. I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.